Okay. Happy Sunday, everybody. Hope you guys are doing well. Welcome TRT members. What's going on? Hope you guys are doing well. Yeah, sorry I could not do the video yesterday. I know it's a Sunday. Maybe some of you folks are at church or or doing Sunday family activities. But I figured I'd try to get this in as early as possible in the morning for you guys. So anyway, yeah, it was a good week. I was in San Diego from Monday through Friday. Well, Monday through Saturday, actually, because our flight kept getting delayed out of San Diego. They had an oil spill and on the runway. So San Diego airport was down to just one runway. And so all the flights incoming and outbound flights were coming in on one runway. So it was very interesting to run into that type of situation. So we extended the night. But anyways, back home yesterday morning. So thank you guys for shout out to Maury down in San Diego, buddy of ours in TRT, gave me a ride to the air. I'm sorry, gave me a ride to the hotel and CVS to pick up things. So well, what is that? Oh, okay, that's weird. What is Okay. Anyway, gave me a ride to the airport, and I'm sorry, the CVS and the local hotel, etc. So anyway, appreciate that, man. All right. Anyways, all right. So let's go and get started. It is 10 a.m. on this beautiful Sunday morning. Let's talk about market update. If you are not in TRT, you can visit us at therockTradingCode.com. My brief commercial plug here, and follow me at the Rock Trading with the underscore here on Twitter, and you guys can see my daily posts, etc. Interesting week, right? And so, the question really is that we're trying to answer today, or what I'm trying to take a digest into, is that is the bear market over, or because the S&P 500 and most stocks were reject, a lot of the indexes was rejected at the moving average 200 this week. I believe it was Monday or Tuesday when the SPY actually hit the moving average 200 on the daily and pulled back and sold off. And so we're seeing a little bit of selling pressure. Is this the end of the bear market rally? Are we going to visit new lows? That's really the question that's on everybody's minds. And I want to say this before I get started here. I'm going to show you some interesting statistics, and it's up to you however you want to interpret the data. I just found it over the internet, very credible sources. They're not my indicators, they're not my data, but I found it to be very compelling evidence, all right, that potentially the bottom is in. Okay, now how much more do we pull back from where we are right now in the markets? That's everyone's guess. It could be a fib level, etc. But obviously, a little bit of pullback is healthy after a big run, and we've seen that over the course of since June 16th low. Okay, so so I'm going to show you guys some data. It's up to you guys how you guys want to interpret that. Some of you guys are very bearish in terms of the macros. Some of you guys are very bullish in terms of the technicals. And what I will say is that over the course of bull markets and bear markets, you will see a lot of people calling the tops, calling the bottoms. You will see a lot of people also not make money, okay, in that process, because calling tops and bottoms actually does not, all right, generate you money. What does generate you money is actually trading it. So if you're out there calling tops, calling being a bear, etc., you're not going to make money that way, because you're not putting money into the market, right? So you got to actually trade. And so here in TRT, what we try to do is just trade on a daily basis, by the hour, by the minutes, okay, and not worrying too much about whether the bottom is in or whether the top is in, etc., or whether the stock market is doomed to crash. Okay, so we don't know that. That's up to a lot of other macro events happening in the world. But what we want to answer today is is the bottom in, all right, or even is the data, the indicators, is it suggesting a bottom, but it's not 100%, right? Any data out there, any indicator, any article you read out there, they're not going to be 100% correct. Okay, but let's just go ahead and take a look at the headline for the week. First red week on the S&P 500 after 4 straight winning weeks, and everybody's panicking. All right, because obviously when you're trading, you want to have I understand you want to have a general consensus or indicator leading you to believe that, okay, we're going to go down more, etc. But I would suggest, continue to trade on a daily basis, hourly basis, trade by the 30-minute chart, the 5-minute chart, whatever your short time frames are, and not be too concerned about everything that's happening out in the world, but also be just cognizant of it. All right. So weekly EMAs, as far as the standard S&P 500, the weekly EMAs are still holding for me. Okay. And if you guys know that I use the 9 and 15, 34 and 50 clouds, okay, the Ripster clouds. So right here, we do have a shooting star candlestick on the weekly S&P 500. All right. So that is in itself a bearish look right there. No doubt about that. All right. And it kind of starts to look, it looks like this top here, this candle here back in early June, or was it, I think it was March or May. Yes, March. Okay. That you have this also shooting star. Well, this is probably a gravestone doji here that indicated a top after it moved above the 3450 cloud. So one thing I will say is that going into this week, the S&P 500, it should, all right, it should find some type of support at the 4200 or right under the 4200 level. If that place holds, then you could see the market go a little sideways. Now, we do obviously have Jackson Hole speech coming up on Thursday, approximately, I think it's 10 a.m., where Fed Powell will be making a pretty big speech. In addition to that, we do have PCE data on Friday, which is the preferred gauge for the Feds. Okay. So anyway, for the week, S&P 500 edged 1.21% lower. The Dow slipped about 10 basis points here. Tech heavy, obviously NASDAQ was down over 2.5% on the week. Okay. Let's keep going here. SPX breadth, okay. S&P 500 breadth, as I mentioned last week, this is the primary chart that I'm looking at. All right. Still, we have about 45% of stocks, or 47% of stocks, I'm sorry, above the moving average 200. Even though the S&P 500 did get really rejected off the moving average 200. So we're not. So right here, just based on the pullback this week, a slight pullback this week, it's not very meaningful in terms of which direction we're really going to go on Monday or the following weeks. Okay, so obviously a slight pullback is needed. Fun fact I want to give you guys out there: since World War II, the 13 times a bear market has retraced up to 50% of major decline have all signaled the beginning of the next bull market. I found this interesting article on Market Insider. A really nice stat here that you can go check out for yourself. Two major signals that was triggered on August the 12th. Now, this would obviously be the week prior. During that week, we saw on August 12th, all right, S&P 500 hit about 4265, which is a 50% retracement from the midpoint of June lows, okay, right here. I'm sorry, not June lows here, 50% retracement from the midpoint to the June lows. So we are nearly there. All right. Now, S&P 500 is still above about 4,200 at this point. So we are seeing that slight pullback. All right. And one more indicator that I'm showing you guys here is, or I'm going to show you guys in the following chart, is that during the April 16th, June 20th, where obviously where COVID happened, this is the percentage of S&P 500 above 50-day moving average. Okay. A potential bull market signal is a 90% level. Okay. On August 11th, it was at 85%. Okay. If you guys remember, June 20th signaled the bottom as well. And we know that the March bottom was in about 3 months after. Okay. So when stocks started moving above their moving average 50-day, okay, at 90%. On August 11th, that number was at 85%, which triggered a signal, a very important signal, that with the potentially, okay, not 100%, that the odds are in the favor of the bottom process is in. So let me show you this next chart, okay, right here. On August 12th, remember I said on August 11th, we hit 85%. On August 12th, we actually reached that 90% level where the S&P 500, all right, percentage of stocks over 90%, All right, and the SP 500 has crossed over the 50-day moving average. Okay, so that's a very and this chart is compliments of Shafako Capital Management. I can't take credit for it. This is their indicator, but this speaks to the odds. Okay, just speaks to the odds that potentially a bottom is in, and the odds are looking in that favor. Okay, and you have to also admit that this particular bear market rally feels and looks a little bit different than the prior rallies that we saw in the SP in the SPY. All right, if you look at early 2008, early 2002, where we had financial crisis, etc., subprime mortgages, all that stuff. Okay, here in early 2008, the financial crisis. All right, the indicator shot over 85% right here. All right, and down here you saw that the bottom was in around this area back in 2009, and then the market continued to move higher. Okay, and obviously much higher in April 2020. Right here you saw stocks, all right, S&P 500 50-day moving average across 95%, nearly 100% of stocks after that COVID dip signaled the bottom for the market. All right, so here we are at this level where, you know, we're at over 90%. Obviously that number is slightly pulled back a little bit since we've reached that number, but that generally but the odds are in favor of the bulls here. All right, so that's pretty interesting, and we got to give credit to where credit is due. Sentimenttrader.com, Dean Christians. All right, so you can follow him on Twitter. He said this is what he tweeted out: the number of S&P 500 member trading above the 15 moving day average remains depressed at 27.35%, which signals a bottom. A surge above 90% would likely mark the end of the current market. And once again, I'll pull back this chart, and we reached that target back on August 12th. Okay, so we'll see what happens in the coming weeks. There's obviously going to be pullbacks. Obviously, you know, with Bitcoin being down over the weekend so far, hovering above 21K. And I'll say one thing about Bitcoin. Okay, the markets tend and the indexes do tend to follow Bitcoin, especially over the weekend and in the S&P 500 futures, NASDAQ futures. But that doesn't signal that the market is selling off. At some point, all right, as Bitcoin is dropping, et cetera, the market is going to decouple from that correlation. So I hope you guys realize that it's not a for sure indicator. All right. So with that being said, I hope you guys enjoyed that stat right there. Okay. A couple of things that's happening this week should be pretty interesting. Market moving potentially is that we have a big earnings on the semiconductor, which is Sammy's chips. Okay. On Nvda. All right. I'll cover that today on Wednesday after the close. Some potential earnings that's going to be, people will pay close attention to will be Affirm on a Thursday after the close. Marvell, obviously another Sammy. Ulta, all right, retail sector, consumer discretionary stocks. They're going to be looking at that. You do have Macy's, which is pretty a big one on Tuesday before open. Dick's Sporting Goods is going to be a good, interesting one to take a look at. Salesforce, CRM, Snowflake. Okay, so these are big tech ones Wednesday after the close, and that can help push Qs or the SPYs up a little bit in either direction during the after hours, because these are big companies. Okay, they are a big part of S&P 500. So with that being said, you have Dollar Tree, Dollar General. That's retail on Thursday. So pretty, busy earnings week we have here. So I hope you guys are rested and ready to go. All right. And finally, okay, so I'll leave that to the last slide. Let's go ahead and jump into the Qs. I'll jump into, a couple of the other stocks here. Okay, so let's take a look at the Qs here. All right. Now, obviously, the Q is magnetizing, right? If it breaks below that 320 support level, I do believe this week, possibly tomorrow morning, you never know. We might just get a gap down tomorrow morning to fill the gap down to 318. If you remember back in August 9th, All right, we had gapped up from 318 areas all the way to about 322. I'm sorry, 324 open and 322 dip here. So if we don't hold that 320 this coming tomorrow, I do believe that pullback to 318.85 is going to, that gap fill will happen, and I prefer it. You know, if you want to trade the bounces, I think you want to trade first some short side to fill that gap, and I do believe that gap is going to get filled this week. Okay, it's pretty close. I mean, we closed at 321 in the after hours on the Qs, so that looks like, you know, if let's say, for example, Bitcoin starts falling overnight tonight, all right, that means that, you know, potentially we can gap down. So let's see that gap fill. All right, and that actually correlates nearly at the daily EMA 21 level. So I'm going to put a target there, a downside target there for the rest of the week, that, hey, we're going to fill that gap down to 318 and we'll go from there. Obviously, there's going to be some selling pressure. The volume was pretty high, above the 20-day simple moving average of volume on the daily. Okay, so you do see the stochastics, all right, and the commodity CCIs started to hit that bear signal here. So you can't deny that, right? So you got to still trade the direction. This would be a signal right here below, and we're crossing that 50 or half value line. So once that happens, you'll see a little bit more selling pressure. Now, what you want to see as a bull is that line, all right, drops real quick, because just 2 days, 3 days of red has already pulled back that CCI line. If it pulls back down to zero, that means it's going to reset. Okay. Now, I will say on the hourlies, the 2 hour, 4 hour timeframes, we are a little bit oversold. Okay. So that's a cautionary signal to the bears that, you know, you might be playing with fire, and that the rips or the bounces could be really hard as well. So just be careful going into Monday, but let's see that gap fill and we'll go from there. So if you look at the 1 hour chart, okay, the 1 hour chart, we're actually hovering, all right, around the EMA 100 line, just pretty much stuck at this level. All right, 322, 321. You know, again, you look at the stochastics, it's actually at the bottom here. All right, so do not be surprised you see some rips, all right, moving that up. But if the selling pressure continues, even if the hourly stochastics move up, you'll see it, you know, obviously people short, all right, or fade the rips. Okay, let's go over to the 2 hour chart. Okay, pretty much same scenario. You can see that the CCI and both the stochastics are pretty darn low. All right, so this is area to be careful. Let's go over to the SPY, and I'll talk about the weekly here. Once again, you know, the shooting stars, right? These are obviously very concerning concerning candle structure if you are a bull. So, but once again, the EMAs are holding. I do expect this to pull back. 420 is going to be an area that has to hold, all right, for the bulls. All right, so we on the daily, we've already closed under the EMA 9, and looks like the 15 is next, which is right under 424.18. All right, and you do have this gap also on the SPY, right, from the 416 level all the way down to the 412 level. So, that's going to be quite a dip going into next week. Now, if you are long-term bull, I think that's a good dip buy. If you are, you know, going short, I think it's a pretty good idea going into this week with pretty high volume on Friday sell off. All right, which is a confirmed selling pressure, and you want to see this gap filled. Okay, so downside target on the SPY, of course. I would say if it breaks 420, very likely that we'll see this gap fill pretty quickly. All right, so downside target 416 on the SPY. If we do get a bounce, all right, if we do get a bounce, here's the interesting thing, is that you may see a retest, all right, some type of dip, and try to retest that moving average 200 on the daily and get rejected again. Okay, so if you are a bear, you don't want to see this happen. All right, but if you are a bear, obviously you want to see some bounces and you want to see this gap fill. Okay, so I'll leave it at that. All right, so right now, again, going into Monday, not looking too great on the bull side. So looking like shorts for Monday coming up. All right, let's go on to Apple. Okay, I'm going to talk about Apple real quick. Now, Apple, as I always say, if Apple goes, there goes the market. Okay. Apple closed on the week at its lows, which pretty much it closed at the opening price on Monday, and it actually went lower in the after hours on Friday. You can see this area is highly contested and defended by the bears and the shorts. Okay. All-time highs 182. Bear market rally, I mean, just popped. Apple went 34% from the lows to its highs to 176 on Thursday on this past week. So obviously, this is not a very good pattern for Apple going into this week. Now, I will say 170 is support. Okay, if that 170 loses, all right, your next support is going to be down to 162. Let's go ahead and zoom in on the daily, actually. All right, you got some EMA holding here, which is exactly at 170, EMA 9. All right, 15 would be the 168, 167 area. You do have a gap. All right, Apple has a gap here too that might need to get filled all the way down to possibly 165, 166. So if this starts breaking the clouds, all right, and the pressure keeps coming in, then you can likely see the downside probably towards 166, 165, and to fill this gap, and we'll go from there. So that's Apple for you guys. All right, Tesla. Tesla held well. Did you guys see Tesla on Friday? Yes, a red day for Tesla, but you have somewhat of a hammer structure, low volume selling. Okay, pretty low volume selling, way below the moving average 20 SMA here. All right, stuck in the cloud here. It doesn't mean that I don't see Tesla ripping if the markets aren't moving, but you can see that there are bulls holding the line in this area right under the 900 area. Okay, on the 4-hour chart, I do feel, all right, I do think that you have somewhat of an inverted head and shoulder pattern. All right. So this would be your left shoulder. All right. This would be, okay, your right shoulder, and this would be your head. Okay. If Tesla goes, it will hold up the indexes. All right. I don't know. Obviously, the stock split is happening this coming week on the 25th, I believe. Yeah, the 25th morning. All right, you do the stock does split. Now the question is, of course, will the stock sell off after the split? Sell the news kind of thing. We'll see. But so far on the 4-hour chart, I do see this inverted head and shoulder pattern going into this coming week. So could be interesting. Let's talk about Nvda and Sammy's. All right. So right here on the 4-hour chart, not the exact perfect head and shoulders pattern that I'd like to see, but let's just go over to the daily. But here on the daily, you can see that it tried to move, okay, try to break this IHS, inverted head and shoulders pattern, try to make a move on this past Monday or Tuesday and failed at the 190 level with now a pullback underneath. You do have support and volume support here between 169 area. And you can see this held here on this dip here. So this held here, all right? So let's see a dip. I'm okay to see some dips going into tomorrow because they do have earnings on Thursday after the bell. All right. If I see Nvidia coming under 170, which I don't think it's going to drastically come down there all in one day, but if it comes down to the support level, it might be ideal to buy calls going into the earnings because eventually at some point Tuesday, Wednesday, the earnings hype, all right, for Nvidia is going to start, all right, and for Sammy's, and that's going to mean also same thing for AMD. If you watch AMD, MU, Marvell as well, okay, Micron, those stocks generally move together in a bunch, okay. So if you think Nvidia options are too expensive, go for AMD or go for MU, go for Marvell, okay. Another one is you could go SOXL, okay. SOXXL is the ETF fund for chips and Sammy's, and it's a bull fund. So you can actually buy shares for the earnings as well. You don't necessarily have to play Nvidia options going into earnings. However, it could be lucrative. So I will say that let's see a dip down to this area to find some type of support. If it does, great, fantastic. I think it is a worthy of a call. I just don't want to be caught chasing because I do think if they come out with inline earnings, I do feel that the stock price is going to get pinned and it's going to burn some options. But you might as well play the run up if it comes under around 170, 167 if that dip comes in the next couple of days. All right, so that's Nvidia for you guys. Um, let's see what else is happening. Oh, Oxy, you guys want to keep an eye on Oxy. I'm not suggesting you guys go chase Oxy because it's very, very close to resistance at 73. All right. But you closed at 72 on Friday. As you know, the news is that Warren Buffett has received permission from the SEC to acquire a 50% stake in Occidental. Okay. Why he wants to buy 50% of it, I just, maybe this is eventually going to 100. All right. But there's going to be some hype on Monday, pre-market, probably, that it's going to reach that, it's going to hit that resistance and pull back. So if you guys see that, hey, if Oxy starts pulling back about the 73 area, I think it's a great puts play going into Monday morning. All right, so that's what I'll be looking at this coming week. With that being said, 65 puts, sure, Rob. Okay, all right. Go ahead if you guys have any questions on YouTube. Okay, cool. Thanks for that. He's going to buy out the company he normally does. Yeah, it feels like it, right? He obviously loves this company. He's been buying shares in the 50s. If I remember, his average is in the 50s, and now he's buying more, and it's crazy, right? I think when he started buying was around this area, around this area, and it's been moving up pretty well for him. All right. What do you guys think about this data, though? Going into this week, and also, is Powell going to pump the market? Is he going to sound dovish? Is he going to sound hawkish? Who knows? But but this chart is really fascinating, though, to me. All right, the signal that was achieved on August the 12th, 95% of over 90% of stocks moving above their 50-day SMA. All right, let's see. All right, let's go ahead and check the Qs. Someone says check the monthly on the Qs. Okay. Yeah, well, I mean, the month is obviously we're not quite over yet, but if we close the month above 330s, I think it's it would end up being a really nice candlestick. All right, it's still holding. All right, and that's the thing. I can't imagine now. I can't imagine Qs shooting up to all-time highs. I can't imagine Qs from this level drop back to 269, 270. But hey, anything is possible. And what I try to tell people, at least on Twitter and everybody, is that, hey, listen, whatever the direction goes, I'm not emotionally invested in either direction. All right. I don't have money in the market in either direction, except my long-term retirement portfolio, IRAs, things like that. All right. Things I picked up along the way for shares, going long, options, etc. But other than that, right, on a day-to-day basis, if the market's short, just go short. If it runs, stop fighting, right? Because if you look at the Qs on a daily, all right, in this run up from the 269 area, at least in this immediate trend right here, all right, look at what's happening. Look at these bull flags, right? It pulls back and runs. Yes, there were some economic events. I totally understand. And you do have economic events this week, right? Powell and PCE pull back. The last three pullbacks, okay, or four here, we have ended up making higher highs. Okay. Now, this one is making a lower low than here, okay, than from the pullback on August 8th. All right. It's just, for me, technically speaking, it just doesn't feel like it's a reversal. More so, I think that it's a pullback versus a total bear reversal. All right, but I know the bears are hungry. I get it. All right, let's see. Okay. All right, 29. Oh, wow, there's a lot of you guys joining on today on Zoom. I appreciate you guys. Let's see. Yeah, I look at different time frames all the time. If I'm intraday trading, all right, you guys know the EMA strategy. I go on the 5-minute, but I'm also looking at 30-minute charts. Okay, sometimes I'll pop in and out with 1 hour, 2 hour charts, just kind of see where we are in the regression channel. All right, if you guys look at the 1 hour regression channel on the Qs here, all right, this is with extended hours, is that we're hitting a bottom of a channel, and that would be about 321, which is exactly where Q's is right now at 321. Okay, so this is the bottom of this channel. If you are looking at 1 hour, you do not want to buy puts at 321. Right? You're nuts. All right. At least wait for a dip or a rip. All right. Or some type of bounce, because the CCI, all right, is so freaking low. All right. Wait for a rip up to 325. And then it's likely going to get rejected. If you see a pump on Monday morning, then short the pump. Okay. Because likely there will be a lot of people shorting the pump. All right. So, but if you buy puts here, you're nuts, because it's going to bounce from the channel. All right. Now, and what I'll do during the intraday is that I'll look at the 2 hour chart as well. Now, we are below the channel on the 2 hour. Okay. Generally speaking, look at what happened here. When we went below the channel, things started bouncing. Okay. Now, obviously, this can go much lower. I totally get that. All right. But I follow this so that way I do not catch myself buying puts in the wrong places. All right. You're better off buying puts here in the mid channel than take a gamble, just in case it doesn't rip. Okay. Around here, okay, maybe here, but not down here at the regression channel. All right, because things are too oversold, at least on a shorter time frames at this point. There are better opportunities to go short tomorrow. I do not decide where to anchor my channel. This is the linear regression channel tool. It's a standard free indicator on TradingView, and it draws it for you. All right, so there's no guesswork. Yes, I do. I use the STO and the CCI in the 5 minute. I no longer use RSI or MACD. I think those are slower indicators to me. CCI and stochastics operate a little bit quicker and faster for me. All right, and gives me a better indication. All right. Now the thing about STO and CCI, if you guys don't know how to use these tools, if you look at the 5 minute chart on Qs on Friday, all right, this is the after hour shaded, which is focused on this area here. Okay, you see how the STO, all right, was just hanging out near the top of the channel. Okay, so this area here, all right, got heavily rejected. We saw that, right? Could not push through. Okay, I wanted to push through. I bought puts. I bought calls here, waiting for a push above. All right, and I took my profit. However, it got rejected on a 34.50, and this signaled a short. Okay, so you needed to go short here. All right, now this was a pretty interesting trend day, but you can see the stochastic was full of bounces. Okay, so this is the chop that I want to avoid in trading, okay? Because you saw this pullback, and all of a sudden there was some dark pull buys on Friday. Towards the end of the day, there were some dark pulls, there were some option rollovers, OPEX options expiring, rollovers, etc., and it caused a little pump here, okay? This is dramatically upsetting if you have puts. Okay, it's great if you have calls, but it got faded back down. So it's burning both sides if you're playing options. You know, and Thursday, if you look at Thursday chart, this wasn't any better either, right? I mean, you get a lot of fake outs, okay? Lower highs kind of pumps, and the lows held on Thursday, but it was starting to get weak, and we finally gapped down. This was okay to play, all right? And what you really want to do, all right, is, you know, go with these big trend days, all right, where things are just heading lower and lower and lower. Those are better days. And then, of course, there were some bounces. I totally get that. But the thing about stochastics is that even though it's oversold, it doesn't mean it can't keep getting oversold. All right. I don't know another indicator that is even more accurate than the stochastic. However, it just means that oversold can stay oversold. All right. You saw this crossover here. Okay. All right. Got overbought here and then just shot straight back up. All right. So if you were buying puts here, right? Well, congrats. You got to take profit, but don't expect the market continue to, you know, pay you, right? Because all of a sudden the bull signal came in and crossed over and blew up all the shorts. Okay. So that was pretty interesting on Wednesday anyway. All right. Let's see. Okay, let's go ahead and okay. All right. Any YouTube questions? I'm here. No. Okay, no questions there. All right, 33 minutes in. I think that's good. So once again, my upside targets for the Qs, all right, is 325. If we lose 321 or the 320 level, I do think eventually we're going to see 318 coming up on Monday, all right, unless something starts bouncing. Now, we do have a pretty heavy earnings week going into the week, so be careful, especially in the NASDAQ, where Salesforce, Snowflake, all right, Nvda, if they report good earnings, it might give it a little Red Bull, maybe a little pump. All right. Marvell might, may or may not. But over on the Dow side, consumer discretionary side, you have a lot of retail happening on Tuesday, especially with Macy's. So you could see Tuesday where in the morning, consumers discretionary starts moving up and the tech starts selling off. That can happen. We saw that this week with last week with Walmart, and we saw that with Target earnings, et cetera, where money started shifting, all right, based on earnings. So that tends to happen in the intraday. Okay, so going into next week, my final thoughts have zero assumptions and bias of direction. What I showed you today was simply odds of things occurring or the things that have already occurred. Maybe the bottom is in. 90% of the time that works, but it's not 100%, right? Rally is not over just because you have one day of volatility. All right. Odds are in favor that the bottom is in. Be nimble, continue to practice risk management. You want to survive this bear market, not be broke by the end of it because you don't have money to play the bull side. Eventually, the bull market will come back because you've seen how resilient this market is. So with that being said, I appreciate all you guys on YouTube and the TRT folks. Have a great Sunday, and I will see you guys next week.